problem with investors. Investors have been very cautious in India. So I find Indian investors value revenue too much and not building assets. And building assets is what deep tech investing is about. It's about, you build a fusion reactor, the design itself would be worth probably $50 billion or more. I would think a good reactor design with no revenue. That's what I call really differentiated building. But Indian investors are more focused on revenue and running a spreadsheet. I will tell you something surprising. In the last almost 20 years we've been investing at Khosla Ventures, there is not a single example where I've used an IRR calculation to decide whether to invest or not. That's how different our approach is, and it works well for deep tech investing.
Wow.
One has to imagine new systems. I think the other thing I would say is once there's role models of different kinds of investments. People didn't want to invest in e-commerce till Flipkart happened, and suddenly everybody wants to invest in Flipkart. So people look to have successful role models. But I do think there's huge advantages in India, both in deep tech because of the technical talent there. There's less academic research, but it's very easy to build global companies with collaboration with Western universities or Western professors. So there is a lack of that kind of investing in India, and there is lack of role models of that kind of success. And once that happens, I think India will have an advantage.
That's a very powerful statement, Mr. Khosla, that you don't use IRR to decide on what to invest in. There are a few VCs in the room, so I will get their reactions.
I will say, we don't use IRR. We've never used an IRR calculation. I can't remember seeing one in the last 5 or 10 years in our shop.